Mr. President, I appreciated hearing the senator from Vermont describing the amendment, and I haven't seen the text of the amendment, but I am a co-sponsor of the bill that would do exactly what he says. I think transparency at the Fed is something that we can agree on. So I look forward to seeing the rest of the amendment, and if it's just that, I would be very pleased to work with him for passage. Mr. President, I am rising to speak today on the Hutchison-Klobuchar amendment, and my colleague, Senator Klobuchar from Minnesota, is also on the floor. And we want to take a moment to talk about our amendment that is going to assure that community banks have a more level playing field than it could be the case if the bill that is before us, the Dodd bill, passes without our amendment. Our debate to reform our financial regulatory structure should focus first and foremost on filling the gaps in regulation that led to our financial crisis. I'm encouraged by the good faith efforts of Senators Dodd and Shelby to end too big to fail, and I certainly hope that we will see language on that so that that is put aside, because I think that is the most important area of this bill. We must end too big to fail. And when Senator Dodd and Senator Shelby produce the language that they have agreed on, I think that will open the rest of this bill for the amendments, such as the Hutchison-Klobuchar amendment that we're discussing now, that I think should be part of overall reform. We've got to look at other areas of concern besides too big to fail, such as the lax underwriting standards and the lack of transparency over our derivatives markets. Those are amendments that also will be coming to the floor to assure that we address those key issues in the financial reform. One area on which we can find agreement is that our nation's community banks were not a cause of the financial collapse that we saw in the last 18 months. They didn't have risky loans and financing schemes that sent our economy into a downward spiral. Financial reform should not punish the financial institutions, such as community banks, for the faults they did not commit. If anything, financial reform should reflect what we learned from safe and sound practices that are used by community banks. We should learn from the example of Texas First Bank, Galveston County's largest locally owned family of community banks. On September 13, 2008, Hurricane Ike made landfall over Galveston, Texas, packing strong winds and a high storm surge that ravaged much of Texas Gulf Coast. Just 2 days later, on Monday, September the 15th, 2008, Texas First Bank was open for business, and many of its locations provided Hurricane Ike relief loans and other services to area families and small businesses reeling from Ike's damage. Senator Mary Landrieu and I visited Galveston several weeks later. Now, I was there the day or so after the surge that came over Galveston in a helicopter, but I couldn't get on the ground at that point. But we came several weeks later, Senator Landrieu and I, because we wanted to look at the recovery, because Senator Landrieu, of course, has had so much experience with Hurricane Katrina, and we wanted to do everything to get help to these people. And so we had a press avail at a small neighborhood restaurant, and there was the community banker from Hometown Bank, who also was applauded by the owner of the little Italian restaurant, and he said the banker was in there helping us clean up the restaurant and make sure that we had the liquidity to open our doors, because there was no food to be had on Galveston Island at that point. And they wanted to get up to serve their customers, and their community banker was right there with them. President Obama himself has said that community banks are intimately woven into the fabric of the community. Banks such as Texas First Bank and Hometown Bank in Galveston County are examples of this. In the uncertain financial times, community banks worked hard to steady the financial hands at the wheel. Community banks provide depository and lending services critical to America's families and small businesses. Despite holding just 23% of the banking assets in our nation, they make 2/3 of the loans to small businesses. Small businesses must have support from community banks to invest, to expand, and to create jobs. Despite the widespread recognition of the importance of community banks, the current bill imposes on them a regulatory structure that punishes them. I am particularly concerned about a provision in the current bill under which the Federal Reserve will only retain supervisory authority over bank holding companies that have over $50 billion in assets. Republicans and Democrats agree that we don't want too big to fail anymore, because too big to fail means taxpayer bailouts. So, what does a bill that says large banks over $50 billion will have the implicit backing of the government? It means they'll be too big to fail. Creditors expecting to be made whole through this backing will offer cheaper credit to the large banks, putting community banks at a competitive disadvantage through no fault of their own. That's the first reason that we need to pass the Hutchison-Klobuchar amendment. The second reason is that this provision arbitrarily shifts many community banks out of their current prudential regulator, the Federal Reserve. The Federal Reserve supervises more than 6,800 banks of all sizes in all parts of the country. These banks include large bank holding companies like Bank of America, Chase, J.P. Morgan. The Fed also supervises smaller community banks, Citizens National Bank of Nacogdoches, my bank, in addition to Texas First Bank in Galveston County, First State Bank of Mineral Wells, and 33 other state-chartered banks that are members of the Federal Reserve in Dallas. I have heard from the president of the Federal Reserve Bank in Dallas, Richard Fisher, as well as presidents of Federal Reserve Banks of Kansas City, Minneapolis, Philadelphia, and Richmond, all of whom are in town today, and all agree stripping the Fed of its supervisory authority will drastically reduce the Fed's ability to achieve its objective of maintaining sound monetary policy for our country. Under the Federal Reserve Act, the Fed is mandated to effectively promote goals of maximum employment, stable prices, and moderate long-term interest rates. Implicit to this mandate is a goal of fostering stable, long-term economic growth, which requires stability in the banking and financial system. For the Fed to have proper insight into the banking system, it must maintain supervision over a wide breadth of banks located across the country. In curtailing the scope of the Federal Reserve's supervisory authority, Senator Dodd's bill does the opposite. The Fed will lose its 845 state member banks, which are so vital in providing a good sense of underlying economic forces in their respective localities. This will leave the Fed to cull information about the state of our economy from where? From the banks that are $50 billion and above in assets, meaning monetary policy is going to go forward reflecting our largest financial institutions. Well, monetary policy can't and shouldn't be geared toward the New York banks and the Washington policymakers. The Federal Reserve needs insight into the health of our banking system and economy as a whole. That's why we have regional Fed banks. It is important that they have the supervisory authority of banks of all sizes and in all parts of our nation. Mr. President, I want to ask Klobuchar, who has stepped up to the plate to be a co-sponsor of this amendment, and now we have bipartisan sponsors on both sides, to just say a word. I'd like to yield to the senator from Minnesota for a few minutes to have the Minnesota perspective and make sure that people know that the community banks of this country should not speak in a whisper to the on high in Washington and New York. No, they should be speaking in a loud voice to all of us through their Federal Reserve banks, which means the Hutchison-Klobuchar amendment should pass. Mr. President, I would yield the rest of my time to the senator from Minnesota.
Senator from Minnesota is recognized.
Well, thank you so much.